Hey, good morning, guys. This is Greg with Ideal Trading Ideas, and today we're going to be going over 5 quarterly paying dividend stocks. So, guys, I decided to do something a little bit different. Usually, we use the NASDAQ website and we go through our 5 quarterly paying dividend stocks, but I decided to use my E-Trade account, right? And one of the reasons why I decided to do this is because we have our snapshot, charts, news, options, analyst research, fundamentals, earnings, insider activity, and historical quotes all in one area. And it's easy for us to really see what's going on. So I just want to try something different. As I move along in our little presentations per se, I'm please asking you guys to go ahead and hit the subscribe button, like, comment, so on and so forth. We really do appreciate all the love and support, right? So we're going to go ahead and continue to push forward. As you can see, we have OKE, ticker symbol, currently valued at $55.57. We have no movement after hours, right? Extended hours. We have bid size at 55.03 for 100 shares. We have ask 55.40 for 900, right? And you give the little snapshot. It's showing you previously closed 55.57. The volume is 238. Average volume over 10 days is 1.9 million. They have a market cap of 24 billion. Days range, they're not showing it. 52-week range is 23.28 and 57.55, and they're showing you when this happened, right? So if you're looking at 52-week range or the yearly range, you see that we're still close to the high, right, of 57.55 over the past year. Look at the outstanding shares. We have 445 million. We have a beta at 1.6. We have PE ratios at 18.43 times earnings, right? We have EPS of $3.04. We have quarterly dividend yield, which is going to be 93.5 or 6.73% over the year, right? So they're going to pay you 93.5 a quarter per share. Ex-dividend date was on July 30th. Dividend payable date was August 16th, and we see next earnings is going to be October 26th, right? So what we can do is actually scroll down. We see that we have different news. We have price analyst research. It says whole. We have equal weight, neutral, whole. We have technical research. People are saying avoid. This was done on 9/10. And then you see the options, right? So what we like to do is kind of move forward to analyst research. And as we click on analyst research, we want to see what the average price target is. So they're saying the average price target is $57.44. High is 61 and the low of 50 is 53 is what they're saying. In the last 3 months, 9 ranked analysts set 12-month price targets for OKE. The average price target amongst the analysts is $57.44, which is right there. Analysts compare their price targets to the current market price of the stock to determine how much potential upside or downside movement there could be in the stock, right? So we have the gold line right here that represents the 61 high. The blue line represents the 57.44 mid, and the purple line represents the 53 low. As we scroll down, we see the different analysts from where they work at, Morgan Stanley, so on and so forth. We see that we have all these different holes. We have a buy right here on August the 6th, another hole August the 5th, and they're showing you the different price targets, right, for OKE. And we also have the articles that you can read, so on and so forth. You can click on all those and find out a little bit more information. So we pretty much know that they pay out 93 cents, if I'm not mistaken. We'll go back to the snapshot really quick. We're paying out 93 cents and a half per quarter per share, right? So if we did the math on purchasing 100 shares right now at $55.39, this is what we'll do. $55.39 times 100 shares. It's going to equal $5,539. So if we want to own 100 shares of this stock right now, it's going to cost us basically $5,500. And then what we're going to do is clear that out. We know it's $5,500. We're going to take the 935 or 0.935 times the 100 shares. And then it's going to give us $93.50, right? So basically what we're earning off this stock is $93.50 a quarter, right? So it's 4 quarters in a year. We're going to go times 4, and we're going to come up with $374 for the entire year. So off of $5,500, we will earn $374 for the entire year. So not quite 10%, 6.73% more, to be more exact. But you also are not counting if we're compound interest and so on and so forth. So we're not really counting that in, but 374 is a solid number that we would be hitting, right? So it's up to you if you want to kind of move in that route. Obviously, when you own 100 shares of a stock, you're able to now do other things with it, right? That's why I always tell you guys that, hey, really think about buying 100 shares of anything you're getting, 100 shares or more, because then it opens up an opportunity to do option trades, so on and so forth. So let's go over to our insider activity, because honestly, I like to see if anybody in the company has been selling, right? So right here we have insider sentiment. OK has not reported any insider buys through the SEC and the past year. It may have reported transactions activity through other regulatory bodies. As a result, the activity below may not reflect the complete activity by the company's insiders, right? So as you can see, we have a ton of water options. So they were giving out options. We have exercise of options, right, that took place. And you can see different people. Chief Executive Officer, this happened February 19, 2021. And you can see how much money. So hey, it's quite a bit of money that's rolling throughout this particular company, exercise of options. But we don't see anything where people have actually purchased shares to buy or actually sold off their shares. They're basically doing everything through options, right? So what we're going to do is keep pushing on to our stock number 2, which is Gilead Sciences, ticker symbol GILD, currently valued at $71.33. Nothing doing extended hours. You see the bid size, $71, 200 shares. Ask is $71.15 for 100 shares. When we pretty much look at the volume, it's 4,992. Average over 10 days is 6.3 million. We have a market cap of 89.4 billion. And they don't show us a day's range, but the 52-week range is between 56.56 and 73.34. So once again, when we take a look at the ranges where we're at for the year, we're still on the high side when it comes to GILD. Shares outstanding is 1.3 billion. We have a beta of 0.5 with a PE ratio of 17.51, an EPS of 4.11, right? You can always click on these little I or information boxes and they'll explain to you exactly what these different EPSs, PE ratios, and so on and so on means, right? Right here, they're paying out 71 cents a quarter or 3.98% annually. We have ex-dividend date of September 14th, which just passed about a week or so ago or a couple of days ago. Dividend payable on September 29th. Next earning is going to be October 27th, right? So once again, we can go through here, type in via our calculator the price, which is $71.33. We have that right here, and we'll times it by 100 shares, which obviously going to be $7,133, right? So we'll spend $7,133 to acquire 100 shares, and then once again clear that out, and we say, hey, we're going to be getting 71 cents a quarter, right? So it's going to be 0.71 times 100 shares, which basically is going to be $71, right? And then we're going to times that by 4. Is $284. So we know $7,100 spent, basically we're going to get $284 back at the end of the year or throughout the year, right? Because we're going to be getting paid quarterly, so every 3 months. But it's going to add up to be about $284. And once again, I know people are saying, goodness gracious, I spent $7 grand and I'm only going to get $284 via dividends. But once again, like I like to tell you guys, once you buy 100 shares, it does open up the opportunity for you guys to go ahead and start doing option trades. Now, I'm not a financial advisor, so I'm not going to tell you guys to go out or what to go out and actually buy. Personally, I think that $71.33 is still kind of high for this particular year when it comes to this stock, right? Because we know that 56 was the low. I would prefer to get it in between or at its low point, right? That would be my ideal scenario. But this is me showing you guys how much money you would make if you decide to go through and get dividends. We're going to X that out. We're going to move forward 2, Principal Financial Group, PFG is the ticker symbol, currently valued at $65.74. Nothing through extended hours. Bid size right now $64, 400 shares. Ask size is $66.80 for 100 shares. We see the opening, we see the previous close $65.74. Volumes 1. Average volume 10 days is 976,000. We have a market cap of 17.6 billion. 52-week range is 37.03 and 68.40. Once again, this is another company where we see that we're still on the more higher side. Yes, it's not as high as its 52-week high, but it's still close by it, right? So we're like $3 off in a sense, to give or take a couple of cents. Then we have shares outstanding, 268 million. We have a beta 1.4, PE ratio of 11.44, earnings per share of 5.75. We have a quarterly dividend of 63 cents and a 3.83% annual dividend, right? We have ex-dividend date of that passed on August 31st. We have a dividend payable on September 24th, and we have the next earning, which is going to be October 26th, right? So quick math, 63 cents times 100 shares is going to be $63, right? And if we just look at how much we're going to be spending, it's going to be basically $6,500 if we buy 100 shares. 65.74 times 100 shares, right? So basically a little bit over $6,500 that will be spent. We would get $63 a quarter back, and we're pulling out the calculator. It's going to be $63 times 4, which will give us $252. So about $252 back annually off of spending $6,500. Once again, most people will probably say, nah, kid, that's not enough money, but you would have to understand, you actually have to go through and really look at the charts. And we haven't really took a look at the charts real quick, but looking at it over the year, you can see if you had bought when it was a little lower, $38, and as it went up, you would have made double your money back, right? Or close to double your money back. So you would have made your money off of that end as the stock rose up in price. And if you know anything about option trading, like I always tell you guys, if you own those 100 shares, now you're able to do covered call option trades, which means that you're able to generate monies on a weekly basis, bi-weekly basis, tri-weekly, monthly basis. It just depends on you. And as the price has went up, you could have easily hit those marks, or actually try to stay away from hitting certain areas while picking up some premiums as the price continued to rise, right? So we're going to get to that at the very end. We're going to move on to Kimberly-Clark, and I know I kind of skipped over our analyst research and insider activity. We'll get to it on Kimberly-Clark and in the last one as well. So we have Kimberly-Clark at $135.94. We have a previous of $135.94, volume of 195, average volume over 10 days is 2 million or 2.1 million, market cap of 45 billion, 52-week range 128 and 155. Looking at it, hey, we are on the lower end right now when it comes to Kimberly-Clark. Obviously 135, not too bad. It's not the low, but it's not the high. So hey, when you're looking at it, that may be an ideal target for you to get in at, right? We have shares outstanding at 336 million. We have a beta of 0.1, PE ratio of 23.18 times. We have an EPS of 586, quarterly dividends of $1.14, and a 3.35% annual dividend. Ex-dividend date is September 9th, 2021. Dividend payable on October 4th, 2021, and we have next earnings of 10/25/2021, right? So 135.94. We're gonna do the math on that. 135.94 times 100 shares. It's gonna give us a little over $13,594. So that's quite a bit of money that we would be spending out to get our 100 shares, right? So 13,005, right? Clearing that out, we're gonna get $1.14 a quarter. So 114. Clear that out. 1.14 times 100 shares. We're gonna get $114. We're gonna times that by 4. 4 quarters in a year, $456. So off of, was it $13,000, $13,500, we're going to come out with $456, right? So we're getting paid a bigger dividend than some of these others, but we also are putting out almost double the amount of money, right? So those of you who have the money to go in and buy 100 shares, hey, that may be something that you are willing to do. And other people may not have that type of money to put in. And once again, dividend yield is really not that big, 3.35%. But once again, when you own 100 shares, you're able to make moves that other people are not able to do. So if you only bought 1 share, the difference in how you're going to make that move is totally different. When you bought 1 share, you're just waiting for the price to go up. If you bought 100 shares, you're going to get paid dividends just like the person that bought the 1 share, but you also are able to do option trades, covered call option trades, so on and so forth, to generate money. And believe it or not, off of probably 1 covered call option trade, you're going to generate what you would have generated off of a quarter, which is 3 months. You would have generated that within either a 1 week time frame, 2 week time frame, 3 weeks, or even not 3 weeks, but 1 week, or even up to 1 month, right? You would generate more than $114, $1.14 in a 1 month time frame for using Kimberly-Clark. I can guarantee you that. All right, so what we're going to do is move on to the analyst research for Kimberly-Clark just to see what they're saying. And they're saying that the average price target is 141, high is 164, the low is 130. And it says in the last 3 months, 7 ranked analysts set 12-month price targets for Kimberly-Clark. The average price target amongst the analysts is 141.75. Analysts compare the price targets to the current market price of the stock to determine how much potential upside or downside movement that could be in the stock price, right? So once again, gold line is going to be that 164 high, blue line is going to be the 141.75, and the purple line is going to be the low of 130. We look through and we see the different analysts and who they work for, and you see they're giving buys. We have a hold, buy, hold, and we have a sell that was issued on July 26, 130. We also have the different articles that you can go through and click on. And then we're going to move on to our insider activity just to see what's going on past year. And it says no KMB insiders has purchased company stock this year. The last buy occurred by Deckard Robert W. Purchased a total of 3,000 shares on October 29, 2020. In the last 5 years, insiders have on average purchased 1,700 shares each year, right? So on August 17, 2021, we had an officer, Powell Aaron, who sold 29,000 shares. And you can see that the price was between 139.49 and 139.52. Shares held was over 8. Shares held right now, it's about 8,000 shares. And the market value of that price was 4.1 million, right? So selling off 29 shares. We have same person, exercise of options, made quite a bit of money, exercise of options from this person. So we have different officers that were basically selling off of their shares that they were given. And we have another sale, Underhill Kimberly, on 7/26, had a sale, 19,000 shares. So you can see, man, their officers have been selling off their shares at that 135 range, right? $2.6 million. Quite a bit of money has been made from their officers. They also have award options that was given to them. They have exercise. They have a sale right here by another officer, $198,000 right here. And they sold between 137, 137.88 or whatever. But it was only 1,400 shares, right? So we have a stock gift to a director, 700 shares, and we have exercise options by Wilkinson. So we have quite a few executives or officers in the company that are selling shares or exercising shares in that 130-ish area in August, right? So when we look at it, hey, it's still 135 right now. And so they basically got off. And what does that mean to me? It means there's a possibility that the price is going to drop down. At least that's how I look at it. We're in September now. They did most of this in October, in August and in September in the 130s range. So to me, is a possibility. It may mean that, hey, the stock could be dropping down a little bit in price in the near future. We'll see. Moving on to 3M. So last but not least, number 5 is 3M, currently valued at $182.66 per share. We have the previous close at $182.66. Volume is 3,416. Average volume 10 days is over 3.1 million. Market cap of 105 billion. 52-week range is 156.13 and 208.95. We are at 182, right? So sort of right there in the middle, as you can tell. We have shares outstanding of 578 million, a beta of 0.8, PE ratio of 17.97 times. We have EPS of $10.17. We have a quarterly dividend of $1.48 or 3.24% over the past year, annual dividend. Ex-dividend date was issued on August 20th, 2021. Dividend payable was on September 12th, 2021. And next earning date is 10/26/2021, right? So looking at the chart really quick, we can see that, hey, we had a low of about at 156, 158 area, and it's went up, right? So anybody that had purchased their 100 shares obviously would have made some money as time had went on. But just looking at the price right now, 100 shares would cost you what, about $18,000? Well, 182 times 0.66. We'll clear it out real quick just to make sure. 186.66. Oh goodness, we messed that up. 182.66 times 100 shares. It's going to be $18,266. So to own 100 shares of 3M right now, you're going to have to spend $18,266, right? And then they're paying $1.48 out a quarter. So we're going to go $1.48 times 100 shares. It's going to give us $148 times 4. It's going to be $592. So $18,000 spent out to receive $592 back in dividends over a year. And once again, that may not be acceptable for most people. So I would tell folks that are out here spending that kind of money on their shares, hey, it's your money. It's up to you what you do with it. But I would really want to tell you guys to look into learning how to do option trades, because to me, $592 a year is just not worth my $18,000. I want to make more than that, right? So $592 is what you would make for the year if you did decide to get in that. Obviously, we know the price has ranged up to about $208, so you could make money as the price goes up per share. So that's another way you guys can make money. Looking at insider activity, we have right here, it says 3M has not reported any insider buys through the SEC in the past year. So nobody's really bought anything, but you do see we have sales, right? So we have sales of over 6,000 shares, $1.2 million made exercise of options by the same officer, and the same amount of shares. Over $611,000 made on that deal. And as we go through, we have different exercise of options and shares, and you can see the price range. 197, that was exercise of options 101, $200 sell price. You know, so most of the officers got off of their shares, it seems like, at the highs, right? 200s. They felt as though, hey, that was pretty high for 3M, and they sold off their shares, making quite a bit of money for some of them. This person on right here, Hammond's Eric, got off 1,700 shares, and as you can see, that was $356,000 that was made, right? So you just go through, you can see, hey, we have the water of options, we have exercise of options, so on and so forth, right? We have 4 pages of that, so we're not going to get into it. And what we are going to do is we'll look at, I think we've already looked at the, no, I guess we didn't. So analyst research, we kind of skipped past that. We have average price target of 203, right? High of 225, low of 172. It says 9 ranked analysts in the past 12 months have set a price target, right? And you see the price targets 203 average, 225 high, and 172 low. And you see that even on 9/17, we have a sell, we have a buy back in July, and then we have holds throughout the rest of July, right? We have some pretty high price targets, right? But Average price target is going to be that 203, right? And they believe it's going to make it to the 225. So those of you who are holding 3M at this time, analysts believe that the price is going to go up to about that 225 high, or on average about 203, right? So what I want to do is, as we always talk about how much these stocks cost, right? So 3M obviously costs quite a bit of money, and this is the daily chart, right? So daily chart on our Robinhood platform shows that we're down 97 cents, or down negative 0.53% in pre-market, right? Going into the weekly market, we can see that we're down $5.17, or negative 2.77%. 1 month chart says that we're down $18.56, or negative 9.27%. 3 month charts have us down $15.11, or negative 7.68%. 1 year chart has us up $13.69, or positive 8.15%. So those of you who had purchased a year ago, hey, you're winning, up 8%, right? 5 year chart has us up $6.69, or positive 3.82%. So even if you bought 5 years ago, you would be higher than you were in the beginning, right? So as we take a look at what's going on in 3M, remember what I was telling you guys about those of you who decide to buy 100 shares at a particular price. If we wanted to trade 3M and do covered call option trades, right, we have a sell call that we'll be clicking on, sell call, right? And even expiring today, September 17th, if we decided to say we're willing to sell our shares off at 182.50, current price is 181.69, they would give us 84 cents times 100 shares, which is $84. They will give us $84 up front to say that we sell off our shares at 182. Now, some of you would say, no, I'm not willing to sell off my shares for that price. And hey, it's up to you, how you're willing to kind of make your moves and maneuver, right? Because hey, they're going to give us $84 up front, but you also have to look at the difference between this 169, 181.69 and the 182.50. So the difference between that, just to go from 181.69, just averages up to 170 to 182 alone is like 30 cents. And then we have a 50 cent on the back end. So that's like an 80 cent, 81 cent move. So even then, we're already looking like at like $165 that could be made just from the move up off of 100 shares. So remember, when we're talking about the amount of money that we're going to be looking at making over a 3 month time off of dividends, just like that, you've made more. Like in 1 week, you would have made more than you would have made in 3 months off of doing it. Now, if you decide to do it for a month, that's September 17th. We'll go to October 15th. We'll see what they're offering. $304 to hold for a month to sell at 105. So they're going to give you that 304 up front. So 304 times 100 shares, $304, right? They'll give you that money up front. That's for 1 month. And you're saying I'll sell at 185, right? So the difference between buying at 181.69 now and the 185, you're going to make that plus this. So quick math, we're going to say that we make somewhere around $700-ish, right? So 82, 83, 84, 85, that's $400 plus another $3. So a little bit over $700+ that you would make on this particular deal if you decide to sell at 185. Hey, if it never makes it up to 185 by October 15th, you still keep the 304 that they paid you, which is more than what you'll be making holding those shares. So yes, you will spend $18,000 totally on those shares, but at the same time, in 1 month's time frame, you would have pulled off $300+ dollars. Now, if you decided to go even longer and decided to do it for the 3 months, let's just pick it January 21st, and you decide to do the same thing, sell at 185, they're willing to give you $805 up front just for saying, hey, I would sell at 185. $805, 805 times $100. They'll give you that up front. Remember, you are not going to make that in a 3 month time frame from dividends. You're going to make maybe $100+ dollars. But in this case, if you decide to go 3 months out on your option trade, they'll give you $805 up front. And then you have to remember, you still got another $400+ dollars that you would make on top of that. So you're going to be about what, $1,200+ in the positive if it sells off at 185 by January 21st. If it doesn't and the price has dropped down, let's say it dropped down to the 170s or something like that, and you purchased that, 181, you still receive $805 up front. So you can kind of minus off that money. If you didn't spend it, you can minus it out and still come out with a significant amount of money. So that's how you come out winning when you're looking at doing covered call options. Me personally, I wouldn't go out that far because I just don't want to. But I would go out a month to pick up that 305, and then because I would be hoping that in that month time frame, hey, we probably did sell off at 85, pick up the extra money, and then let's see, hey, maybe within the next month the price may drop back down, maybe to the price that we initially purchased at, or even lower, and we can pick up those shares for a little bit of a cheaper price. That's just me. But remember, I'm not a financial advisor. I'm just showing you guys how you can kind of move in the marketplace to make a good deal of money. So once again, hopefully you enjoyed this long video on 5 quarterly paying dividend stocks. And in the end, hopefully I've shown you how to make a little bit more money other than just the dividends doing your covered call option trades on the example of 3M, right? So please like, subscribe, comment to the channel. We really do appreciate all the love and support. You guys have a great day. Bye.